The next question is E14.17. Strickland Company owes 200,000 plus 18,000 of accrued interest to Moran State Bank. The debt is a 10-year 10% note. During 2022, Strickland's business deteriorated due to a faltering regional economy. On December 31st, 2022, Moran State Bank agrees to accept an old machine and cancel the entire debt. The machine has a cost of 390,000, accumulated depreciation of 221,000, and a fair value of 180,000. So prepare journal entries for Strickland Company to record this debt settlement. So the first thing that we need to do is to calculate how much is the gain on the extinguishment of debt and how much is the gain or loss of the disposal. Yeah, the gain or loss from the settlement. Okay, so the fair value of the machine is 180,000. Meanwhile, what we need to pay is 218,000. So the bank accept the machine and will cancel the entire 218,000. So of course this is a gain because we pay or we settle by using only 180,000 to settle the whole 218,000. Yeah, so there's the gain on extinguishment of debt. And then the second thing that we need to determine is the gain or loss from the disposal. Okay, so first of all, we need to calculate the book value first by using the cost minus accumulated depreciation, which is 390,000 minus 221,000. Yeah, it should be 169,000. Okay, so the book value is less than the fair value. So it means that it is a gain also, yeah, of 11,000. Okay, so in the class I will explain there won't be any gain or loss and loss. The correct one is that we can get the gain if that the fair value, yeah, is more than the book value of the asset and less than the amount of your debt that you will settle. Yeah, so we'll make the journal entry and we will debit our notes payable because we have settled it, and then we will debit the interest payable, okay, 18,000 also, and then we'll debit the accumulated depreciation because we disposed it, yeah, 221,000, credit machine because we disposed it also, and then credit gain on disposal of machine 11,000, yeah, which is from the fair value of the machine 180,000 minus the book value of the machine. And then credit gain or extinguishment of debt, okay, it is from the total debt minus the fair value of the machine, 38,000. And then B, how should Strickland report the gain or loss on the disposition of machine and on restructuring of debt in its 2022 income statement? So again, gain or loss, usually we will record it as other income and expense. And then C, assume that instead of transferring the machine, Strickland decides to grant 15,000 of its ordinary share $10 par, which have a fair value of 180,000 in full settlement of the loan obligation. Prepare the entries to record the transaction. So again, we just change the transfer of the asset or equity to equity. So we will still debit the same thing, which is the notes payable 200,000, interest payable 18,000, and then we will credit the share capital ordinary, yeah, by 150,000 from 15,000 times $10 of par value, and then credit share premium ordinary, so it's from 180 minus 150,000, and then the gain on extinguishment of debt will be still the same 38,000.